STRC Stretch is a variable rate dividend preferred stock from Strategy, MicroStrategy. And let me break down what that means and let me explain why it's quickly becoming the core of my Bitcoin cash flow framework. Okay, so let's break down each of the words. Preferred. Preferred stock just means preferred versus general stock, which means the preferred stocks are higher in the rankings for getting paid dividends and they don't have voting rights on how the company operates. Okay, dividend. Dividend means you're receiving a dividend for owning the stock. Variable rate means that they can move that dividend rate up and down. And just recently, Strategy announced that the dividend yield for Stretch, STRC, increased from 10.5 to 10.75. Okay, why did they do this? The reason why they did this is because Stretch has a par value, a fair market value, a par value of between $99 and $101. When Stretch trades below 99, the company will increase the dividend. When Stretch trades above 101, the company will decrease the dividend or hold the dividend steady. Okay. And so now the dividend is now 10.75%. Another thing you should know is these dividends are different than other dividends, where a lot of dividends from other companies are categorized as income. So you're receiving dividend income taxed at your income rate. These dividends are classified as return of capital. So because of the unique structure of MicroStrategy as a company and the way that their entire business model is has their software business, and now they have their digital credit business, and then they have the holding of the Bitcoin treasury, they are able to do complex corporate accounting and make the money return to you as a return of capital, meaning that there is no taxes in the year that you receive the money. All that it's doing is it's lowering your cost basis on buying the STRC. So 10.75% tax-free has an even higher applicable after-tax yield, which is why it's quickly becoming the core of my Bitcoin cash flow framework. So to just recap briefly, this channel, I get three, there's three kinds of people that come here, and I can see this on the back end. They come from Bitcoin only channels, they come from Bitcoin plus crypto channels, and then slowly there's also people coming over from dividend kind of in the FIRE movement channels, right? And Stretch is kind of like it's appealing to a lot of different audiences, which is playing into kind of MicroStrategy's thesis on it and why I believe it's one of the most interesting things happening in Bitcoin at the moment, because the volatility of Bitcoin has always been Bitcoin's greatest weakness. It's the reason why people that are hardcore Bitcoin only are extremely passionate about it, because the volatility can ramp it to the upside really quickly, and they are kind of philosophically motivated to go through the downturns. Whereas crypto investors and whereas dividend and FIRE movement type investors, they don't have that. They don't have both of those things. And so them participating in Bitcoin, there's been a tension there over the years. Stretch slices all the way through that by creating a very compelling product where Strategy is basically saying, hey, we will take on all the volatility of holding the Bitcoin on our balance sheet because we understand what it's doing long term and we are able to weather the ups and downs of this thing. But we totally understand that your investment objectives are different. And so we will gladly pay you this 10.75% dividend. It also, the reason why it's also good for Strategy is because, and this all plays into why it's becoming a core of my framework. And I'll talk about, switching from growth investing to income investing. The reason why it's like a good deal for Strategy is because they were taking out corporate debt to buy Bitcoin anyways. Like their exact framework is fiat money. Like fiat money is infinite and infinitely creatable and infinitely loanable, right? And so there's just a thing of if you can get a good loan and buy Bitcoin, Bitcoin will rise faster than the fiat loan payments. And so you're making money on the trade. Dividend stocks is basically the same thing. It's just rather than them setting it up as debt that goes on the balance sheet, they're selling a preferred share. And I'm saying, I'll buy that share. I'll give you the $100 par value and you can give me the dividend. So that's why it's a good deal for them, because they believe in the increasing purchasing power, like increasing value of Bitcoin versus the very minuscule dividend payment in the grand scheme of things for everything. And so, okay, and then why is it good for me? Like why it's good for me is because like every individual is dealing with how to hold Bitcoin while also wanting to knock out personal finance goals in their life. That's another reason why I think there's always been a little bit of a tension between the Bitcoin movement and the like financial independence retire early movement, is because there was just so much talking past each other. Like Bitcoiners were focused on Bitcoin number go up and take over fiat money, and financial independent retire early investors were focused on, like safe, tried and true index funds. In honestly, they're with the goal of retiring early, right? And so you don't want the variability of the ups and downs. You want to set a plan of, I'm going to buy this index fund that grows at X%, and then I'll be able to retire at X year. So it's very like analytical, right? What's interesting is that both groups are actually saying the same thing. When you're saying that like, oh, VOO is the core of my like retire early portfolio, VOO, the S&P 500, the S&P 500, like low cost index funds, like the S&P 500 is, yes, the benchmark of like America or whatever, and basically the world, like, right? Like people already understand that, yeah, government money markets only pay 3 or 4%, and bank accounts pay below that. So you have to be invested to beat inflation. And so people use the S&P 500 as like the safest way to beat inflation, right? And so when Bitcoiners were saying, hey, Bitcoin helps beat inflation, it's the greatest, the greatest invention in the last 10 years, like all this stuff, that kind of is like, again, talking past each other, because people are like, well, the S&P 500 helps him beat inflation too. So now, what does all this have to do with Stretch? What all this has to do with Stretch is like, hey, we will pay you a 10.75% yield. So that beats bank accounts, it beats government money markets. And yes, it doesn't increase at 10% a year like the S&P 500 does, but it will pay you a dividend at 10% a year. And so that trade-off is like really, really interesting. For that part, okay? And because again, being a Bitcoin focused income investor, I wanted to start replacing my previous W2 income, and I wanted to start to free up lifestyle hours for me to pursue other things, right? And so that's what made me flip. Buying spot Bitcoin doesn't do that, because spot Bitcoin doesn't pay a yield. Okay. So that's what took me down the rabbit hole of learning about income investing. And then income investing and the FIRE movement, again, very much leans on like classic blue chip dividend payers, right? But it's hard for me philosophically as a Bitcoiner and someone who understands the competition between Bitcoin and fiat money to get excited about companies that aren't at least tangential to Bitcoin, or at least aren't like, the CEO and the board of directors, they don't seem aware of like monetary debasement. And so that makes it hard for me to kind of get excited about investing in them, or even really like trust investing in them, because I'm just not really sure what their core, like it doesn't feel like they're analyzing the world in a way that makes sense to me. And so that brought up basically two options. And the two options are like, there's three ways of making money, like with investments, right? There's probably more, but the three easiest ones to think of are like trading. So active trading. But again, I'm trying to free up hours. I don't want to sit there looking at the ticker symbols and doing that stuff. So that's out. There's selling options. So selling options, selling covered calls and collecting the premiums. And then there's dividend stocks. And so like covered calls on Bitcoin are great. And if you're still looking for some growth, then that becomes, covered calls on Bitcoin becomes a good hybrid of like growth and income, right? But then if you're looking for more like stability and less up and down on Bitcoin, like say you're already exposed to a lot of spot Bitcoin, if you're already exposed to a lot of spot Bitcoin, or if you're already exposed to a lot of spot ETF Bitcoin, then leaning more on STRC and making STRC more of your core will help you. Again, your total volatility will come down while adding in some income. And so Stretch is quickly becoming like the core holding. Another way of explaining this is like the core holding in terms of like when I'm waiting for other decisions to materialize. I like the places where I've bought BTCI right now, the Bitcoin Covered Call Fund. I like the places where I've bought spot Bitcoin. I like the places where we've bought MicroStrategy in our Roth IRA. Like I like all of that, and then you guys know I'm a real estate guy. Like I'm analyzing different real estate ideas for 2026. And so it's like when I'm waiting for all of that, if I'm thinking about all of that, then here's another way of explaining it. The core position inside Fidelity is you can choose dollars or you can choose this thing called SPAX, SPAXX. And it's a government money market that holds at a dollar. Okay. SPAX pays about between 3.75 and 4% right now. Okay. STRC is aiming to peg between $99 and $100 per share. And they are paying 10.75%. So a full 6.75%, full 7% more than SPACs. And that right there is interesting. That right there is like Bitcoin versus fiat money and like the Bitcoin paradigm versus the old paradigm. And it's just simply, do you believe that a Bitcoin focused company can pay like so much higher than the prevailing rate of what like money is going for currently, fiat money is going for currently, because they know what to do with it more efficiently than almost anyone else in the world right now. That's the thesis playing out like right there in real time. And so we're having people inside the Bitcoin personal finance think tank. Like we're all climbing over that live right now and realizing that like this is and can be the core position. So it basically sits, if I was to illustrate a yield curve, like STRC now sits one notch up from dollars in your bank account. Is there more risk than dollars in your bank account? Absolutely. Absolutely. Is there more risk than a government money market? That one's a toss up. Like that one's a toss up and that one's a loaded question depending on who you talk to. Okay. So that's what I love about it. That's what I love about it is that like there's like the reason why buying Bitcoin is so fun and so interesting is because there is that like underlying anti-establishmentness to it. And I don't think it's even lost that. I really don't think it's lost that. It's still seen as this like uniquely really interesting positioned like thing. And STRC is now a lighter version of that. It's literally a lighter version of that that is just asking the question. It's just pegging the question, asking the question, which is better, government money market or, a preferred dividend stock, stable dividend stock from a Bitcoin company? I don't know, but I love that the market is being asked that question. I love that people are having to wrestle with that question. And for me, I'm slowly and quickly becoming like STRC is the most interesting thing happening in the world. Every single day, every single month that it is able to, like, this is the story for 2026. It's like watching STRC sit inside its band for all of 2026 is going to be so interesting. And if it's not able to, there's going to be rumblings about that. There'll be rumblings about that, and there'll just constantly be questions about that. But the more that it does get into the 99 to 101 range, and the more that it is able to sit there, and the more that it is able to like season and people are able to like come to wrestle with it, it's going to change things. It's going to put pressure on government money markets. It's going to put pressure on the other ways that other companies borrow money and raise money. It's going to, the Bitcoin and STRC combined are kind of pinching out everything else that like if you're not growing faster than Bitcoin and you're not paying a dividend, you're kind of stuck in no man's land. So you're not really a growth stock and you're not a dividend stock. So what are you fully doing then? And that's what's really interesting. And so I think as I kind of like elaborate, more years into the future, it's this thing of like Bitcoin is my index fund. Bitcoin is to put it in the parlance of like other high net worth individuals in the United States that would say like, oh, the S&P 500 is their base currency because dollars don't work. S&P 500 is the like closest safe growth beating inflation thing that is liquid and I can buy and sell in and out of it all the time, right? If Bitcoin is that for me, and then STRC is the way that pairing Bitcoin with STRC is the way that you pull the volatility down more in line with what the S&P 500 volatility is. And so that's why STRC is quickly becoming the core framework of my Bitcoin cash flow thinking, and the reason why it's the most interesting thing happening in Bitcoin. And anytime that it's trading below 99, you have a little bit of an extra incentive to get involved because the company is extremely incentivized to get it into that range. And so would encourage you to watch I would still encourage you to watch the third quarter earnings call from Strategy. I would encourage you to watch the Stretch announcement video on Strategy's YouTube. And they even made a recent announcement about the 10.75% dividend increase and kind of like a December after Thanksgiving update that's on their Twitter account as well. And so STRC, that's the ticker, beating government money markets, proving that Bitcoiners have better credit and are better capitalized than basically any other option out there. So thanks for sticking to the end. We'll see you on the next one.